Altria Group has entered their buyback era. As you can see, the stock price has rebounded nearly 8% over the last month, including that small pullback we've had as of recently. And honestly, I'm here for it. And if they're going to be doing these buybacks, I actually want the stock to be as cheap as possible for the duration of those buybacks, as it means a more attractive allocation of capital and more accretion for shareholders. They currently only trade for 9.4 times trailing 12 months earnings, and they have a forward PE ratio of 8.3. I think buybacks at this price are extremely attractive and will add a lot of value for shareholders going forward. What they're doing to fund this new set of buybacks, in part, is selling out a portion of their stake in Anheuser-Busch. They previously held about 10% of this company. Now, here's why I absolutely love this move by Altria. As you can see, Anheuser-Busch over the last little bit has been relatively flat, not really gone anywhere, and on a 5-year timeline is actually down. But the reason that this is good doesn't have to do with the share price movement of Anheuser-Busch. To me, this is all about valuation. Anheuser-Busch shares are selling for a PE in the low to mid 20s, where Altria's shares are, again, a single-digit PE. Now, what do you think is a better deal for Altria to do with their capital allocation? To hold on to shares of a probably pretty slow-growing business, maybe even stagnant or declining business that's selling for 20 to 25 times its PE, or taking the cash out of that and putting it into their own shares at multiples that are in the single digits. I think it's a no-brainer personally that Altria's own stock is a much better way to allocate capital than Anheuser-Busch's stock at current prices. It's also pretty impossible to ignore the fact that Anheuser-Busch Inbev hasn't exactly been doing themselves any favors recently. The latest thing dragging the company, of course, is the Bud Light boycott after the, we'll call it, marketing faux pas involving Dylan Mulvaney, which, no matter where you fall on this particular issue, you kind of have to acknowledge that an ad campaign or whatever this was, a promotion like this, probably would not necessarily stick the landing when it comes to Bud Light's, we'll call them core customers. And whether right or wrong, I think it's pretty much universally agreed at this point that this blunder, let's just call it what it is, did cost the company a chunk of change. And now I don't know if the 1 billion figure is accurate. I think it would be pretty hard for anyone to really nail down exactly what the number is, but certainly the brand did take a hit from this. Now, moving back to Altria's financials for a moment. The tobacco giant has definitely seen a slight slide in top-line revenue as, of course, everyone likes to point out, adult smoking, especially in Western countries like the US, where Altria does all their sales, is on the decline. However, it is my belief that the decline in smoking will eventually somewhat plateau and slow down and is unlikely to hit zero anytime in the near future, if ever. Now, in spite of this decline in top-line revenue, the overall long-term trend for their free cash flow seems to be an increase. This is due to pricing power. Their products are quite addictive. Nicotine is one of the most addictive substances known to humanity. And therefore, people, even if they stop smoking, may switch to other nicotine products and so forth. Also, this is interesting. They're actually, to my knowledge, still expecting Enjoy, which is their vaping platform, to become accretive to free cash flow sometime in 2025. This is after pushing it out to 70,000 retail locations. Now, in the time since I started recording this video, shares of Altria Group, along with many other stocks in the market, have actually dipped again. Now, this is a great opportunity for them to do yet more buybacks at good prices, and it could make a strategic entry point for the right kind of investor. I personally have a pretty full position of hundreds of shares of Altria Group, so I don't necessarily need to add more myself, but if somebody else was looking to get in, this could be a pretty good opportunity with the cash flow and the buybacks, not to mention the low price. Now, I think the long-term fear that people have, and this is one of the risks inherent to investing in tobacco companies, is the decline of smoking in the United States. From 1965 to 2015, it dropped from a 42% smoking rate to a 15% smoking rate. And it's true, if the decline happened on a trend line exactly mirroring that, yes, by 2035, it would be zero. However, I think that this is flawed reasoning. I believe that the rate of decline is always going to be faster in the beginning as more and more of the public becomes educated and health conscious. So, how many people learned between 1965 and 2015 that smoking was harmful to your health? Probably quite a few. Nowadays, in 2024, how many generations of people grew up being told right from the beginning that smoking is bad? Yet, do they completely abstain from the habit? The answer to that, of course, is no. Now, anecdotally, I'm a millennial. I know a lot of other millennials. I know some people in Gen X, etc. These people are, some of them, smokers, and many of them have absolutely no interest in quitting. And if they're still alive in 10 or 11 years, I expect they'll still continue to be smoking. So the idea that it goes to zero seems almost absurd to me. Now, even as smoking rates decline, albeit, in my opinion, probably not down all the way to zero, other products seem to be a little bit more popular with the younger generations of adults, namely the millennials and the Gen Zers, the Zoomers. So look at the comparison between how many more millennials and Gen Z have tried vaping versus Gen X, boomers, and the silent generation. Now, Altria doesn't have a dominant position in the vaping market as of this moment, yet they are making a big investment and a big push into it. And if vaping is the new smoking, that seems like it's a wise investment on their part. I've said in previous videos that these companies that we refer to as tobacco companies are morphing into nicotine companies, because products like vaping, or even those oral products, those nicotine pouches, I believe Altria has one called Zins. Those are really more popular among the younger generations here, and they are, to an extent, there to offset some of the decline in smoking. There is also the factor of what I would call nanny state interference risk with regards to some of these newer products. As you can see, there is some senatorial pushback on the Zyn product that's extremely popular with Gen Z. These are nicotine pouches. I don't believe they actually have any tobacco in them. They're just pouches that slowly release nicotine into your mouth. And I get it, right? They probably are not healthy. I'm not saying that. But I will also say it's easy for politicians to be against something for easy political brownie points, right? But it's more difficult for them to be for something. Meaning, people don't have these vices because everything is just hunky-dory. A lot of the time, it's because it's a crutch of sorts. It's the only thing they have that either gets them through the day or helps them relax. I would say these problems are less often the actual problem and more often the symptom. But it's much easier to just point the finger and villainize the product than to actually look at, what might go into making someone more likely to use it and actually addressing that issue. Use of nicotine products in particular, in a lot of cases, goes down as income level and socioeconomic status goes up. So basically, if people have a better life, they're maybe less likely to indulge in this vice in particular, though there's exceptions. There's a lot of affluent people that do enjoy these products from time to time. I also find it an interesting double standard that a lot of these politicians will relentlessly attack the vices of the lower economic classes, but not go after we'll just call them the diabetes and obesity bombs that are enjoyed by middle class soccer moms with their Starbies or their Dutch Bros. Those are vices too, and I would argue probably not much more healthy than a Zyn or a vape. Personally, I think it's because, frankly, politicians don't have a lot in common with the people on the lower rungs of the socioeconomic ladder, and it's easy to make themselves feel good by saying, oh, I'm protecting these poor, uneducated simpletons from themselves and these evil products, than to actually fix anything. Moving on from the regulatory risks associated with Altria, I'd like to look a little bit at the yield metrics, how they return capital to shareholders. So over the trailing 12 months, there has been 9.43% dividend yield and 1.31% buyback yield, which is a total yield of 10.75%. As I mentioned earlier in the video, they are offloading shares of their Anheuser-Busch Inbev stock in order to accelerate the buyback program, which should drive this number up, which I'm very happy to see as a shareholder. Now, regarding the current valuation, I'll run a DCF and give some thoughts. So, regarding the valuation, personally, I think we're at a pretty good price point right now. I believe that there's plenty of upside potential. So I'm comfortable using the 10% discount rate because of the fact that this business has extremely consistent cash flows. And for a growth rate on the EPS, we've gone with between 4 and 5%. I'll say 5% more so in the near term, especially as Enjoy builds out. I think that's reasonably possible. Plus, they still do have a lot of pricing power in the combustible segment of their business. With regards to their balance sheet, I cut the penalty in half on their tangible book value. I didn't want to not consider it at all, but I also look at the fact that they have a lot of brand value. With that, of course, my fair value estimate would be in the upper 50s to as much as maybe $60. I think if it got to 60, I would probably actually consider maybe an exit or reducing my position to reallocate into something else. And when all is said and done, I think the 10.75% yield from both the dividend and the buyback program is probably what I could expect as a rate of return if we don't get any kind of substantial price movement, and I could definitely live with that. Let me know what you think the fair value of Altria is in the comments below. Also, make sure you hit the like button, help me out in the algorithm, subscribe my channel for more videos going forward. Really trying to get my upload rate back up. It's been a bit of a hectic last few weeks for me, so haven't really been there as much as I'd like to be. Also, join Discord, link in the description. Also, check all the links in the description. Cashflow Kings live, 8 p.m. every Saturday. Become a channel member if you want to support the channel directly. Take it easy, everybody.